we made 1:5 risk to reward ratio on GER40, and in this video we are going to be showing you exactly how we went through it step by step so that you too can be able to get the trade next time you see it in the market. We are Bevgrass and we are dedicated in helping young youths learn and master forex trading. So let's get started. As usual, we start from the higher time frame, okay? So from the higher time frame, it's obvious that price has been bullish. This leg is bullish, and we see how price has constantly reacted on order block 1, 2, and this is the third one. Now our draw on liquidity has not yet been met, which is this guy here, this here. So we are seeing that this leg of price was carried by this order block. So we are still on the uptrend, okay? So there are two things we want to make decision on. Because of how we understood the market structure, where we have having higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, which is indicating uptrend, which each of the higher highs are always above the previous higher highs, right? Now we see that this leg of price has been bullish, and we need a retracement, something like this, for price to come and tap on whatever POI and then continue till it gets to this our draw on liquidity. So two things are involved here. Firstly, we use our fib to calculate that leg of price to see the next reaction of price. Okay, so we are seeing that on our between our 0.5 and our 0.6 region, we have an interest there. Okay, so I mapped it, and then I mapped this order block for price to react on first, because price is going to get here first before it gets here. Now let's go to lower time frame for structure. I'll use the 1 hour time frame. Now we see now, okay, let me go to the 4 hour, sorry. Okay, this was how I was able to come up with this order block. I will just delete it. This order block is simply resting on the 0.5 and 0.6 region of our Fibonacci. Okay, that is what we want to see. And then before this move, of course, this order block has not yet printed a lot of liquidity for price to use. So price will not just come all of a sudden. Maybe today you just wake up and then do something like this and dump immediately. No, it will create enough liquidity. So you need to be able to backtest, trade a lot to understand when price is expected to hit a particular POI. Okay, so we already have this order block that is above of this and has what? Liquidity. This order block has enough of liquidity. It broke structure already. Here we have this sweet break of structure here, and we have inducement. Okay, this order block has what? Inducement. Also have a sweep. As you can see, I mapped that sweep there. But one thing that is off about this order block is that it's not a valid order block. So what we want to see, we want to wait and see what price is going to do. So waiting for price, we go down to our lower time frame. As you can see, when price got there, let me remove these ones. This was the sweep, of course. So when price got here, it swept this order block. Why? Because price has retested it twice before, so it is not enough. So you should not be surprised about the sweep, okay? Because that particular order block was tested by price before. Well, of course, it has other criteria as an order block should. Okay, so when we saw that sweep, we were expecting that price should react. What we just want to catch is reaction. We just want to catch the reaction. We know that price is not going to last long in the market. Okay, so we should have that back at the back of our minds. Now let's go to 5 minutes, because when you're not seeing more structures, you go lower time frames. The more lower time frames you go, the more structure you're going to be seeing. Okay, so after that sweep, what do we have? We had price coming to take out this high. Let me remove this so that we can see clearly. Coming to take out this high, and then we see that price failed to, this is our failure to swing, failed to take out this sweep here. That's this low, failed to take out this low, and price then successfully took out this high that caused the failure to swing, and that is sweet. That is what we want to see. Okay, so then we are now waiting for a reaction. That reaction, now if you look very well, we are going to see that this particular order block has been tested, so price is not likely coming back here anymore. We want to see a fresh order block that price has not used. So what is that order block that price has not used? Fresh order block is this order block here that price has not used, because we know that price is still going to come back to test it. Since the both highs has been taken, it means that the reversal is now complete. Okay, so what do we do now? We then, since we know that is this order block that price is now going to use, we then enter from the tip of the order block, of course, because price is rushing up, so it's not going to really come to fill the order block completely. So we take from the tip, and then okay, internal range liquidity, so that we can be off from the market fast, since we know that price is still going to come back. And so that is how we came up with a 1:4 risk to reward ratio on GER40, even when it is not a valid order block. So once you follow market structure, you're always going to get it right. No matter the strategy you're using, you find your strategy along with market structure, and that is how to go about it. Alright, so if you found value in this video, don't forget to like, share and comment. Also subscribe to this channel for more valuable lessons like this. See you in the next one.